Hello, Scott Thomas here with Stewardship Matters. I'd like to share with you about hyperbunching. First, you have to understand what is bunching. Bunching is a tax strategy in which you take multiple years, usually 2 years, and you squeeze the tax write-off down into 1 year. Some accountants will call it loading the box. And so what you're doing is you're taking your charitable gifts over 2 years. You would take your real estate taxes. You would look for ways in which you can squeeze things down into 1 year. Hyperbunching would take many years, 5, 10, 15, 20 years into the future and squeeze it down to 1 year. Why would you want to hyperbunch? Well, hyperbunching can create a zero tax for you. There could be a significant event, or it could greatly reduce taxes, and you're utilizing something into the future where you would have a tax credit in the future, and now you're squeezing it down and using it today. It could also make way for other planning. And this gets me so excited because I've been able to utilize hyperbunching for being able to do other strategies. And so some of the common ways is that you'd have, let's say, a highly appreciated asset. Could be real estate, could be a security, and now you want to take that real estate security and you want to utilize that to avoid the capital gains on it, and then also get a significant charitable deduction. We've got another way which actually takes 10 to 20 years into the future, and this way would be a charitable trust. It's a specialized trust that would allow you to say, I'll take all my gifts over the next 20 years and squeeze it down and take that right off today. Why would you want to do that? Maybe you have a signing bonus. Maybe you have a big real estate commission. Maybe there's an event where there has been a significant amount of income. It could be a lottery winnings. It could be a lot of different things that pop income onto you. It could be that you're going to retire in, let's say, 5 years, but you know you're going to keep giving, and you're going to retire and you're in a top tax bracket, so you're in a 35 bracket, plus you may have state income tax on top of that. You could hyperbunch and take a write-off now when in future years you may not even be able to utilize that. So what are some of the other strategies that I get excited about? One is taking an IRA and converting it to a Roth. That's exciting. And in fact, I want to make a free offer for you that it doesn't take me long at all if we have a conversation. And it's an IRA Roth conversion. So what we would do is we would look at, well, let's take either part or all of your IRA and convert that. And so in this example, there was $500,000 of an IRA converted to a Roth. And over the next 30 years for this individual, there's a $638,000 improvement in assets. It saved $530,000 in taxes. So if you'd like to see your situation of, hey, I've got this IRA, I'd like to convert it to a Roth, what would that cost me? What would that look like? And then on the other side of this, I could marry up a hyperbunching strategy with this so that you have either a zero tax or a reduced tax. I tell you another way that I've been able to help people is I had a lady that right now, she has $260,000 of capital gain on her house above her $250 exclusion. And so we're looking at hyperbunching with a different process to be able to zero that tax out today. It allows her to do something that she wants to do. Her income, everything's going to be boosted up because of this capital gain event, which, by the way, also affects her Medicare and Social Security and how those things are taxed. We can also address that with you as well. So hyperbunching, to do it properly and to optimize it, oftentimes there are more than one idea. It's not just saying, oh, let's go do a charitable trust. It might be a pooled income fund, a charitable gift annuity, a donor advised fund. It may be some other technique that's brought into that so that it benefits you greatly. So taxes are going to get higher. You know, when I came into this business, the national debt was $1 trillion. Today it's over 20 trillion. Do you think we're going to be paying more taxes? We're seeing it at the state level where there's a lot of pressure for states to raise taxes. On the federal level, we're at some of the lowest rates ever. Do you think our taxes might be higher? It might be a good idea to explore what that might look like for your IRA going forward. Most of the financial industry would tell you, let that IRA keep growing, take your Social Security early, don't touch that money. They don't want you to touch it because they're earning fees on it. And so one of the things you need to know about the IRA is that it creates a lot of problems down the road. If you'd like to have a conversation about how to reduce that, love for you to reach out to me. Scott at stewardshipmatters.net. That's Scott at stewardshipmatters.net.